Hello, Warriors. Hello, Face. How's it going, Kevin, Patrick, Ziggy? Welcome, everybody, from investing.com. We're being live streamed there, and want to remind everyone at investing.com that you could join us 5 days a week in our free FX room. Don't forget to register. I believe it's the best free FX room on the net. So I'm calling this Thankful Thursday. Thank you, Jess. Yeah, EG continues its progress. We'll see if we take out the highs. May take a bit more time. How about Blake Morrow? How about being thankful for Blake Morrow putting together ForexAnalytix and then expanding it to have a free room so that you have actionable ideas. And from Monday, Blake's been talking about the potential scenario of weakness settling into US dollar yen. Gave the reasons, great mentoring, what could be a possible cause for acceleration of the downside in the US dollar yen, which was a sell-off in the S&Ps, which exacerbated. And that's what's happening today. Last time I looked, the SPUs are down 9-10 handles. Talked about one bad day could change the picture since we've been in all these narrow range days, strange Halloween type trading all the way into November. And how anyone having some problems this week, or perhaps, you know, maybe you got stopped out, maybe you're down a little bit. Anyone down a little bit and feeling a little, you know, sorry for themselves? Give me a why. Give me a why if you feel sorry for yourself today. No one will admit it? Okay. All right, well, Julian, this is what I want you to think of, okay? Why not be thankful that you're in a position to assume risk and take a loss when there are multitudes of people? Always, Kevin? Okay, yeah, I used to. Multitudes of people that don't know how they're going to eat and where they're going to sleep today. That you're in that upper percentage of people that have extra money to speculate in the FX market. I think that's something to be thankful for. Win, lose, or draw, you're in the game. And I'd really suggest that you invest in your future performance so that you have a traffic light page, because we don't want you running red lights, okay? It's chaotic out there in the FX market. It's the most complicated highway you'll ever drive. So I really believe that you also need more than an hour of analysis a day, although it certainly would have been enough. Could have cleaned up on the short side of yen, made a little money in euro, pound. Grega live yesterday started talking about look out, do not be long. He would not get short, but do not be long S&Ps, and they're getting clipped today. So let's make it a thankful Thursday. I'm thankful viewers from investing.com are viewing us right now. Believe if they have an interest in improving their performance, they too should consider investing in their trading future by becoming part of our family. I have a great interview today. Although his asset class is different, you're going to be able to learn a lot from Sean Emery. He's got a couple of websites. He was rated one of the top Twitter accounts to follow this year last. So looking forward to that interview. In fact, he writes, everyone out there on watching us on investing.com, Sean Emery is a columnist there, so you're probably familiar with his writings. He also writes for See It Market, another big intelligence gathering place. They have a lot of great analysts there. And he's a lot like our boss, Blake. You know, I was reading about him, and very much focus on the fundamentals, and one's technicals with fundamentals. So stick around for that interview. Just a couple of quick looks in the market before I pass it over to Steve. This was the bet scaling in on this decline in euro pound at halfway back at 61.8 back, was willing to do it if it had gotten down here to 78.6 back, risk being the low of the move, not a big risk if it went 78. Began to perform, hasn't done anything wrong. Right now it may be a retracement of this decline, but the premise is that we will exceed this high before we take out this low, and the premise is based upon an extreme momentum reading in euro pound. Everyone with me on that? Maybe you traded it. You know, everyone manages their trades the same way. You know, you could have taken half off. You bought a piece here, you bought a piece here. You could have taken half off, could have taken all of it off, could have bought this flag pullback. To me, I don't think I'd fight it. The 2-week off number is 8.535. That's something else that I teach. So the weekly number by Friday's close, the bullish case needs 88.35, I believe it is. So it's a simple method. You just count back a couple candles. 2 weeks ago, we closed at 88.35, so we're trading 10 pips above it. Looks like an inside week. Maybe we get a strong finish. And the other contention here is something else that I taught, which really kind of attracted me to this trade down here, besides how bad that Blakeu is strongly neutral to the dollar, is very bearish cable. Okay, so, and that's manifesting today too. So potential 3 drive, you know, pattern. I see 1, I see 2, perhaps we get a 3rd drive up here towards 94. And even that won't be a new high if you really want to get macro, but it really could show up on the monthly. So this is saying that we should go to new all-time highs. Everyone see this? This blow-off move, confirmed high. So maybe that's possible, but I'll be on the lookout for 1, 2, 3, and a lower high against a monthly high for shorting opportunity should that manifest down the road. And I just want to show one more thing before I pass it to Steve. And Steve had a very nice rising wedge in US dollar yen.
Yeah, indeed.
You did.
But the big overnight news is not so much the USD yen, it's the Nikkei actually.
Okay, so the Nikkei finally
imploded.
Sir Isaac Newton's theory finally took hold.
I think we have the definition of a blow off top. Actually,
Okay.
I was very lucky to be awake at wild hours. So
you're always awake. Why is that luck? I think it would be luck if you got a good night's sleep.
It was 6 a.m. here, actually.
All right. So anyway, Steve, also with what's happening in the yen, you know, talked about gold, you know, for the last 2 weeks. And, you know, it doesn't mean that you can't be a long-term bear in gold. But the metals look okay to me until this yen decline is over. Why can't we retest these levels again? We'll see. Anyway, I still think there's a chance for 1310 in the gold. Would kind of be like an ABC. Steve, I'm kind of thinking, you know, down, A, B, we get a C up here, shake out all the bears, you know, and then, then the short comes in.
A triangle is a possibility. In
yeah.
This case, we shouldn't retest 1310. We should probably stall somewhat lower than that.
Okay,
the
bro.
other thing is that both gold and silver have been very choppy, so I think there are better opportunities out there to trade.
Okay. Well, a picture speaks 1,000 words, my friend. Like the old TV, like the old TV series, The Outer Limits. I'm now giving you control of my television set.
Okay, okay. So, by the way,
It used to scare me. Oh my God, I'm giving these guys, I don't know them, they're taking over my TV. Anyone old enough to remember the TV show, The Outer Limits? And Steve, if you haven't, I want you to go to YouTube and watch an episode. And then you'll understand me better, how all these things were traumatic, these TV shows, how they shaped my personality.
okay, found it.
All right, buddy.
Okay,
At the
so
beginning, they actually taken,
I
huh?
can't attend the webinar. I have to watch an episode. No, I'm kidding.
All right, why don't you take control of my screen? I trust you more than whoever the producers of Outer Limits were.
Okay, so okay, the big overnight news are obviously the Nikkei. By the way, I'm very happy to say that you know, the chat room has been, you know, a very active community. I mean, it was 6 o'clock in the morning here. That's more, I think it's 11 o'clock at night Eastern time in the US. That you know, I went in the chat room just to say that I was selling Nikkei because I was watching Nikkei explode more than 2% higher. And I remind you that we have been actively speaking about the absurdness of this move.
Oh my God.
Yesterday, actually, it surpassed
Yeah.
it surpassed 21.5%.
It was a huge gap higher opening, Steve, that you faded?
I'm monitoring the CFD, so I'm not sure if it gapped higher. I don't really care. What matters, it went more than 2% higher within a few hours in the Asian session.
It left again.
And then it reversed. So and unfortunately, you know, I was doing other things at that point of the night, so I didn't actually catch the high, but I managed to sell 23,200, and
Nice.
then when it actually went, it was 23,185, if I remember right. And then when it started moving lower and it actually passed the opening price, I actually shorted more, a little bit above 180. So I have an average at 23,000. I actually was surprised. I found a lot of people in the chat room. You know, I went in.
How many were in there that time of night? Yeah,
30-something people actually.
Yeah.
So I went in, you know, an hour later. The price was still it had retraced back to 22,900 roughly. I said, I'm awake due to my son. Sold Nikkei at 23. We had a little discussion about the Nikkei. I said, you know, that my average is at 23K. And, you know, then I left.
So with it being Thursday, Steve, to me, and that is an ugly candle. I'd like to see it close lower on the week.
This is the biggest range we've had in more than a year. The candle we are already seeing today. Yeah. This is a huge key reversal, and this is what Blake was talking about when we were having the general discussion about indices. But by the way, Blake is going to be with us in 15-20 minutes from now. Just letting people know. So this is what we call a blow-off top, right? I'm not implying that, you know, necessarily this is going to be like the high of the Nikkei before everything crashes and burns. But I can tell you one thing, especially if this was a market driven mostly by humans, as the markets we had like until like 10 plus years ago, I would tell you that, you know, it's guaranteed that this is going quite a lot lower, because as you understand, before we got this relentless central bank bid and, you know, so much high frequency trading, although to be honest, this is not an argument, because it has been proven that high frequency tradings and algos can exacerbate an abrupt move lower. So in this case, that might actually help. But central banks, coming in and protecting and buying is a different story. As you understand, let's say that you were long the Nikkei, right? Let's make 2-3 assumptions. Let's say that you were long Nikkei from quite lower, and you see such a day. What are you going to do with your longs? You're going to liquidate them, right? You're going to be like, okay, I've had a very nice run. I made like a killing within less than a couple of months. And obviously the market tells me that this is the price I should be cashing out. Correct, Dale? Now, on the other hand, let's say...
the next step to complete it would be, I'd love that candle to look the same on the weekly, by taking out last week's lows by...
Yeah, personally, if I was long from lower, I would be like, okay, this is the end of the ride for me. Thank you very much. I'm taking my chips out. I'm cashing out. You know what I mean?
Yeah, I'm just saying, and you keep rushing over it. To me, weekly closes are important. Yeah. So now, daily candles are important, but weeklies are even more important.
Now, on the other hand, let's say that you were a sucker buying a move that had already moved like 18%, 19%, 20% higher within 44 trading days, and then you saw that. What would you be doing? You would also be liquidating, right? You would be like, okay, that was a very bad timing. I'd rather get out, with my account more or less in place, then see how this is going to resume. So what I'm trying to imply here is that I would guarantee to tell you that we're going to move a few thousand points lower before we can actually move higher, if this was a market driven 100% by humans. Okay, but it isn't. So I will be I will remain. By the way, this is the weekly candle that you want to see. The weekly candle is already like a huge shooting star. Okay. It's a huge shooting star. After 2, 4, 6, 8, 9 consecutive weeks higher, we already have like a key reversal on the weekly as well. So trust me, the weekly chart does not look good as well. Okay, we haven't seen the close of the week, obviously, but I'm doubting that it's going to be pretty. I'm doubting that it's going to be pretty. So as I said, if we didn't have the relentless beating from the central banks, etc., I would definitely tell you that this thing is moving, at least another 1,500 points lower before we can even discuss about buyers coming in. Of course, I remain a little bit, more skeptical, knowing how these markets work, unfortunately. But I still believe that this is a candle somebody should not be buying into. And this is an extremely, extremely powerful reversal. It's one of the most potent we've recently seen. At the same time, and we had this discussion as well, if you remember here, the two of us, with Blake as well. Blake has been warning about the USD yen since several days ago. We obviously had this work as a catalyst to get a break lower from this wedge. We got a break lower from the wedge yesterday as well. But at the end of the day, we actually retraced the move to close above it. I doubt this is going to happen for a second consecutive day. So that means that short yen pairs, meaning being long the yen against other currencies, starts to look, quite good here. And, taking this opportunity, let me show you a couple of pairs that are at the precipice of breaking down. One of them is the euro-yen, because the euro-yen has multiple formations that are warning that if we actually close below 131.50, 60, it might have a lot of downside left. One is the potential for a double top and a very, very well-defined range. And the second is also a possible head and shoulders formation, right? We can clearly see it here. So we are once again testing the neckline. We're like 10 pips above it. And yesterday we actually broke below it intraday. We climbed back above it. We did the same a few days ago, twice. But as you very well know, how many times can we do that without actually breaking down? I mean, the bulls are obviously holding, but are barely holding, and the pair seems unable to get unstuck from the bottom of the range. So, a break lower seems quite likely. Another pair, I actually tweeted that yesterday, is the pound yen. Now, if we zoom out in the pound yen, we will see that that's something you don't see quite often, is that the pound yen has formed 3 head and shoulders formations during the past 2 months. Okay, one of them was inverted. Not only it worked out and reached its target, but actually extended a lot more than that. The other one was a regular one up here, which actually managed to tag its target. And this is the third one we're getting there. Okay, so this is the third one. The previous 2 have worked out like a charm. And if you zoom in, you'll see that we're very close to the neckline of this head and shoulders as well. So obviously a daily close below, let's call it roughly 148.50, is bad news, because it targets back down to this area, which is like roughly 300 pips lower. I'm sure Blake will have more yen pairs to show and share, but definitely the development in the Nikkei and in the USD yen is the major development to watch today. Now, the question is, are we going to get a spillover? We already have S&P futures being 0.6% lower. 0.6% is like a huge move for the zero volatility, non-existent trading ranges we've experienced since months ago, with very, very, very few exceptions. And as you see, we're also testing the ascending wedge that we have been monitoring for days. Greg spoke about it as well yesterday. If you remember, we have been monitoring it for days ourselves as well here. And this is already an outside, because yesterday night, after the day got reset, we got a fresh high. If you see here, we reached, what was it? 2,596.8, actually. This was a fresh high. Okay, and we're already at 3-day lows. So obviously it's too early, but I think that this move from the Nikkei might actually spill over to the rest of the indices. So be very, very careful. Obviously, I'm still holding on to my SPX shorts and my Dow Jones shorts, and I'm going to be holding to them. I'm now also short Nikkei and very comfortably in the money, actually, within 0 time. So I think that, today and tomorrow might prove to be very interesting days. And I think people should be very, very carefully monitoring risk assets. Okay, other than that, one thing I want to show, but I think this is mostly a victim of the yen moves, is in the 4-hour chart in the Euro USD. You can see it's not very pretty and well defined. We possibly have an inverted head and shoulders formation here that targets even a little bit higher than what we reached earlier. So we might see some little rebounds in against the USD, in several of the pairs. But my fundamental thesis about it hasn't really changed. I mean, the DXY still remains above 94.20, and as long as that's the case, I don't think there is much for us to do here than being cautiously bullish in the short term the dollar for a corrective move, because I reiterate, I also believe that this move higher is most likely than not a corrective move. For a corrective move, for the corrective move to extend a little bit higher, perhaps towards the 38.2, which is 96, or perhaps even a little bit higher, which we have the 200 EMA currently at 96.60, or perhaps a little bit lower at 95.60 that we had, an area of interest there. So, nothing has changed there. Now, let me have a look at a few questions, and I'll leave the vast majority of the questions for Blake, because I know that he's missed answering some of them, and I'm sure he will have a lot more to talk about. So let's see. Thank you, David. Dow Jones at support, expected bounce at the open, says Luca. Let's have a look at your chart, Luca. Yeah, the question is, will it work? Or, as I said, will we get a risk spilling over to everything? An initial bounce, especially knowing how the US market works, is very, very likely. Let me show DJI that's not on at the moment. Let me remind you that we were expecting, a push lower from here as well, simply because this was a very mature leg higher within this very, very steep ascending channel, which broke out, overshot another steep ascending channel, which in its turn overshot another ascending channel. So needless to say, if I remember right, yesterday, Jamie Saitley actually tweeted that. Jamie is a very good trader and analyst. I wrote that he said it, he's one of the few people I follow actually, that yesterday we broke a new record in the Dow Jones. We completed 28 consecutive days with the RSI reading being above, the daily RSI reading being above 70. And that was a new all-time high record. So this is another thing that shows how extreme the recent moves have been in stock market. So even using the excuse of this huge reversal in the Nikkei, we start seeing some corrective moves lower. Even being corrective, these moves can actually extend somewhat. That makes it worthwhile, being on the short side for a few days. Okay. So let's have a look at a few questions. By the way, before we get into that, let me remind people that we had this discussion with Greg as well yesterday. Gold. Greg believes that gold is in a longer term triangle like this and this. And as you can see, it makes sense. And we're likely now within a smaller triangle here. Okay. Same applies with silver, not exactly the same, but anyhow, silver is first of all here in the triangle, but is in a very, very choppy, long-term range as well. So, I see people asking all the time about them, and I have been actively trading them, especially silver, in the past. But what I can tell you about both metals is that, first of all, likely the next move is lower because, usually triangles break to the downside, break to the direction of the trend, which the previous move was to the downside. That's why I said to the downside in this case. And second of all, regardless, this has been a very, very, very choppy market. Both silver and gold, especially silver, had this fake out move lower as well. So my personal advice is, if you want to buy, probably look to buy lower, the two metals. And otherwise, I would say that the best idea is, looking for better trading opportunities. You'll find better trading opportunities.
How about buying an upside breakout? Because I think there's a shot for 1780 and over 1300 in gold. So, I mean, you may have a bias on the triangle.
Sure, it can happen. But let me tell you something. Let's say that we break to the upside. Okay. Why would I trust it seeing this kind of price action? I mean, why would I trust it? I mean, somebody could have said, we had this move lower. We then had that flash crash, right? We then started rallying. We actually rallied above the previous high here. That, I'm pretty sure, caught a lot of people being long right before we reversed lower once again. So in such a choppy market, why should I trust it, Dale? Why
Because
shouldn't
that last high was confirmed.
Yeah, but I'm
Okay.
going to tell you again, trading is all about reward to risk, right? Isn't part of the risk.
Well, I was talking about buying the metals like for the last week or so, and they bounced pretty good.
No.
I'm just saying
I
that
remember that. You're absolutely right.
a triangle is really neutral. That's why it's a triangle. So, you know, of course it came off a break, but a breakout or a failure is 50-50 to me.
A triangle is not neutral. A triangle favors a continuation to the direction that of the move that came into the triangle.
Oh,
I mean,
okay.
Greg is going to tell you the same thing from an Elliott wave perspective, and I'm going to tell you the same thing from a basic technical perspective, just as an observer. I'm not saying, of course, that the odds are like 90-10. Nothing is 90-10 in trading.
What are they? What are they?
I would say 60-40.
Mm-hmm. Okay. That's pretty neutral.
No, it's not actually. You know, 60-40 sounds pretty neutral, but if you think about it, 60% is 20 more than 40%, right?
Yeah.
So would you rather be 60 or 40?
And also one notch above 50-50.
And also don't forget that in statistics, the theory of big numbers, I don't know if it actually translates like this in English, but that's a Greek word, that's a Greek sentence, tells you that as long as you go with statistics, the more trades you make favoring statistics. That's also how poker players are playing, right? They always know the odds of the hand they have in comparison to what others might have, and they know that there are occasions that they might even lose to a 5% chance, but they will still play their hand every single time that their odds are above 50%, simply because they know that at 1,000 times, statistics will actually bring the favors exactly where they're supposed to be. It's the theory of big numbers, you know what I mean? So for example, if something has 60% chances of happening, if you only do it 10 times, you might get really unlucky and get it 8 times going against you. But if you do it 1,000 times, the numbers are going to be very, very close to the 60-40. So as traders that within our trading career take a lot of trades, even I, that I'm not a scalper or a short-term trader, I'm taking a lot of trades in a year, you know what I mean? I like to go with the numbers, right?
Yeah. Okay.
I like to split face cards. Just kidding.
Yeah.
I'm joking.
Hit me, Blake.
I mean, no. If I was sitting there playing blackjack and I did that, somebody has free reign just to punch me in the face, because I'll get up and leave.
They'll leave the table.
Oh, I'll leave. I will leave. I have no doubt. Anyway, but you're talking about statistics, and you're right as far as gambling goes, and same with trading. I mean, trading is really, it is statistical, and it's risk reward. I mean, so when you come up to a risk reward place, it's very favorable, and then statistically that chart pattern or that that move that tends to favor over time that trade, then you're going to take it. And if you're wrong, you're wrong. I mean, and again, I agree with Steve. I mean, I trade a lot, way more than Steve does, but because I know the way he trades, he's more longer term, and I scalp a lot, and I will hold on to positions longer term too, but I do a lot of intraday stuff as well. And but it's all statistics, and it's all risk reward, and that you're going to be wrong, and there's no stopping that. It's just hopefully you'll be right more than you're wrong. And Nitish says my mic is not normal. Do I sound
a little bit low? It's not that we can hear you, it's a little bit low.
Oh wait, hold on. Is this better? Is that better?
But roughly the same, I would say.
Really?
Yeah, but I can hear you. I can hear you. Okay, you're just a little bit lower than usually.
You know, and I think it has. I was actually. It's funny. I was just fumbling with my headset, and I'm like, you know, I need a new headset. It's been through the ringer a few times, and probably is due. Anyway, Steve, you were talking last night about the Nikkei and about capitulation. I don't necessarily agree with you. I think that or you know, a blow off top, I think is what you said. I don't necessarily agree with you because I was watching the Nikkei as well. I didn't see any real abnormal price action other than the market bid up and then it kind of sold off, and it was very orderly. So it's usually the disorderly moves that marks it. Well, it's like a surefire thing for me, you know. Like when I look at the market and I go, and you have to witness really.
I understand what you say. So sorry to interrupt, but isn't it a little bit strange to you that after yesterday we had reached like 90% higher in the Nikkei within like 43 trading days, and at the 44th trading day we have within a few hours of the open of the session the biggest climb during all this nutty move higher? Isn't that extreme? You know what I mean?
It was pretty. I mean, I think we marked a near-term top. I just don't know if it's the top. You know what I mean?
Well, I said the same thing. I totally agree with you. I'm not saying this is the top, but definitely I think this is a huge warning that a correction has started.
I think, and that's why U.S. equities are down today. I think is the price action in the Nikkei, and I don't know if we need to write off the markets just yet. As happy as I'd be, you know, on a big reversal in the Nikkei, because then I know that the yen would probably continue to strengthen, which, you know, obviously I'm still long yen, but you know, but I will agree that yesterday's or last night's move in the Nikkei probably has some longs pretty freaked out, and I tweeted out a chart just this morning about it was also the 50% retracement of, you know, I don't know, what was it, 20 years worth of price action. We hit
the whole bear market.
Yeah. So let me grab the charts really quick, just so everybody can see it.
I think I talked about that with Peter Bookvar when I asked him about the Nikkei, and he was saying, you know, it's just a catch-up move. Well,
yeah,
quite a lot of catch-up.
It has been, and it's been playing catch-up quite well, and you know, but you look at this is, you know. This is 1989, right? 1989.
Yes, 89. I remember it.
2008. You know, and we're at the 50% retracement. So, you know, and we spiked above it, and then we closed lower, and I think it's a pretty substantial move. What I'm going to be really interested in seeing is how we close the week out. And I know today's Thursday, but, you know, and there's still a lot of time. I mean, you know, if you think that this week is over, you're greatly mistaken. It's not. We have a very long, and this is a long upper shadow doji, which Steve is very familiar with, and those people that use ForexAnalytix are very familiar with this chart formation or candlestick formation. But how we close out the week is going to be very important. So if we have if we have a red candle, depending on how big the bar is, you know, will determine if it's like a, you know, just a gravestone doji, or if it's maybe even a shooting star type of nature. But I think the setup is there. I'm not 100% on board that the market is that the Nikkei is completely done going higher. But man, this has been a pretty substantial move. Obviously, if you look from like relative strength standpoint, we're hitting some, you know, fairly overbought levels. But, you know, if you go back and let's just revisit 2013 and This is, for those of you that weren't trading at the time, this is when Abe was elected and talked about his three arrow approach, whatever it was. You see where relative strength got, and did you see how big the move was? I mean, this is about halfway of this move that we're currently in right now. Now, I'm not saying that it's gonna do a complete, replica of this last move, because that move started from 8,000 versus this move starting from 20, what was it, 19,500. So I don't know if we're going to replicate that move, but what I'm trying to illustrate here is to say that there's no more upside here. I don't necessarily agree with that. I do think that we'll get, some sort of pullback. I just, like I said, it really depends on how we close today and tomorrow. There's and this is, very dependent on what I'm doing personally, because I may be scalping the market on an intraday basis on a lot of different things. But I do hold positions in, this dollar yen, because it's right up against resistance. So the risk reward was there from this last week. And so I hope it turns, because if it turns, then we're going to trade down at 112 or maybe down at 110, or, somewhere in the middle of this range. The euro yen, we still have a big double top. Steve showed you guys all this stuff earlier. I just, I'm just kind of reiterating what he said. We're very, very, very important area. As we tested it yesterday, you can see how important this support was yesterday. So is it completely bearish yet? No, but is it set up? It is. You got the pound yen. Oh, and by the way, last night in Asian trade, I was in our chat room, and I shorted the pound yen at the 618 retracement here, and I actually put in a order to buy it when we got back down to the support overnight. I got limited out, so I had a really nice pound yen trade while I was sleeping, which that doesn't happen all the time. But I had a stop that was very tight, and it didn't get tripped, and I got up this morning and I was very pleased with the outcome of that trade. And if you were using ForexAnalytix last night, you got updated of that. Last night, Asian update, the pound yen has retraced 618 of the North American low, also hitting a downtrend line, which should hold as resistance. Keep in mind the Nikkei is up almost 2%, which is significant, and could be in for a pullback too. This was written last night, and that was written right there. And so it all played out fine. And that's just an example of, like, just doing some day trading. But I just tweeted out something regarding the S&P, and in the S&P, we are at wedge support. So we have this huge wedge, and you can see it. I'm really, really zooming out. Let me just go to the 4-hour. Really zooming out here, and we're at pretty key support. We may be at weekly lows in the S&P, but Dale, how many times has the market shoved these sell-offs right up the rear end of anybody who was selling? Often, right? So we have a situation where, yes, we made a lower high, yes, we made a lower low, but we're also at wedge support, and it is North American trade, and if there's such thing as a plunge protection team, they're probably in here going, hey, I'm gonna put this little sell off to rest right now, and this is the time that you want to step in and be a buyer. Will this be the low of the day? I don't know. I mean, it may be, but we have some pretty big news coming out today. Today at some point, I don't know, I didn't look at the timeline, and I should have before I came on here, but I didn't take a look at the timeline. I know we have another tax.
Your microphone, by the way, just went live again. Like,
oh, it did? That's weird.
Yeah, now we can hear you as usually. So
I didn't even do anything, which is really weird. Yeah, I need a new microphone. Anyway, what I was saying is that we're gonna get a revamped tax plan proposal. So I think the response from that is going to be what's going to be key. So if the market looks at that proposal and says there's no way they're going to be able to pass that, or it needs a lot more work, well, maybe the stock market does come under pressure by the end of the day, you know. And if the market seems pretty content with what they see, and they feel that that tax plan is going to be able to push forward, then, you know, the stock market's going to bounce here. And so I think this is, like I said, this is pretty key support. I don't know if I would want to be short equities right at this very second in time. I think if we break the lows that were just set, I think that's probably more of the cue. You know what I mean? For those of you that are like, oh, I just want this market to roll over. And really, I think we just have to break the lows that have just been put in over the last, since we've been talking, since Steve's been on, since the FACE webinar started. I think if we hit new lows after that, then we're probably looking at something a little bit more significant. But as I mentioned with the Nikkei, I think the Nikkei is definitely weighing heavily on traders' minds as of right now. And I think that that's probably got a few long traders spooked. Steve, are you here?
Yes, mate. Of course I am.
Okay, so Steve posted something in our chat room yesterday about behavior, and I was actually a quite interesting read. I'm going to mutilate this a little bit, Steve, but he was talking about it's interesting when you watch behavior of people, and they used an example of riots versus peacetime, having an instigator, a follower, and a peacemaker, which is basically, you know, it depends on which line that these three participants or people behaviors are lined up. So if you have somebody who is a rioter or a troublemaker, they called it, if you have somebody that's a troublemaker who is followed by a peacemaker, that person puts it at ease, and then the person behind that is the follower, which means that you have continued peace. But if you rearrange the positions of those people, if you have a peacemaker and then a rioter follows after that, means somebody who's you know, a troublemaker after that, and then a follower after that, then you will end up having trouble. And it's just the way that the people are arranged. If you are looking at you know, wow, we're seeing a pretty big move up in the dollar right now, guys. Dollar is just ripping higher. Look at the dollar yen. Boom, we just bounced pretty aggressively. Not sure why. Let's look at the euro dollar. Euro dollar just sold off pretty aggressively too. Not sure why. But you know, again, this is you know, you're coming into North American trade. You probably got people going, all right, you know, whatever we were just seeing, we're going to reverse it, and I think that's probably the case at the moment. The pound just reversed a little bit. The euro reversed. Let's see what the Aussie reversed pretty hard. Kiwi has come off. The Kiwi hit channel resistance. Yeah. So anyway, guys, again, I think, you know, if you're getting really, you know, worked up about the overnight moves, I think you have to. Let's see. Hold on. I'm trying to read here, see if there's anything that I see. Nothing really. Just some pullbacks. Or look at the bounce in the Swissy. And this is an interesting chart, guys. If you really want to know if risk aversion is hitting the market, in my opinion, watch the Swiss franc. If the dollar Swiss breaks through this support, I have it at 99.40. If it breaks through that support, then you know that the market is probably a little risk averse, because that means that people are buying Swiss francs. If people are buying Swiss francs, it's probably they're doing it out of for safety reasons. So, but boy, this dollar is just absolutely flying. Let's look at the euro.
61.96, Blake, in my extremely accurate and peacemaker opinion.
Okay, you know, the dollar index. I mean, it's definitely in bullish territory still, and I think people are still finding this as opportunities while we trade above 94. I don't think that's anything that's not known. No, but we are struggling at this 161% extension. Also, you know, the last few days, not yesterday, but the previous days, we put up some pretty long wicks here in the dollar index. You got, you know, some shooting stars, some you know, relatively long pin bars that
You think there's a buy stop above that double top that the second attempt did not take out the first attempt?
Oh, I think there is. Yeah. If the dollar breaks above that, it's going to be pretty huge. But at the same time, you know, if we fall back below 94.25, then you got a double top that's in play, and then you'll have a whole another set of problems. So, and remember, I think everybody's been buying the dollar. I don't think that's I think the dollar has been pretty aggressively bought. You know, everywhere you look. So. Anyway, yeah, so the dollar's getting a little bit of a bid here, and I mean that is a hell of a move. Look at this 5-minute chart. You know, just straight up in the dollar.
It's like the dollar corrected more in time than price, sideways action. You know.
Yeah, look, the dollar's still pressing. Wow, wow. What's interesting is if you look at the dollar yen, yes, it has bounced back, but it's not moving like the other dollar pairs. I mean, look at the euro. The euro has come off 45 pips just over the last hour or so, which is interesting. And yeah, and it probably has a lot to do with the bond market. Let's take a look at bonds. Yeah, I mean, this is it. You know, bonds continue to come off, and as long as the bond markets stay heavy, I don't think that there's much to say about dollar weakness. You know, as long as bonds stay heavy, because yields are propped up. 30 years the same way. The 30-year was rolling over today actually, and you can see here's the 30-year, and look at how bearish the 30-year looks. So you know, as long as bonds stay offered like this, I wouldn't be too worried about stock market weakness, and I wouldn't be too worried about dollar weakness. And that's coming from somebody who's short the dollar yen. I mean, it's just, you know, this is just the bond market's keeping a lid on everything. Now, if the bond market reverses and we start to see a rally in bonds, then you've got a dollar problem, then you have a stock market problem. And I think that probably should be the #1 thing on your screen today, because that I know everybody's looking at the Nikkei and what happened in the Nikkei overnight, but I would actually keep your eye on bonds. I think bonds will tell you the whole story here today. I don't think that yeah. When I stepped in this morning, when I stepped in, the bond market looked like this. So we were right here, and I'm like, well, that's not a good look for bonds. You know, and we were right there, and I'm like, yeah, I don't see how the dollar is going to stay under pressure if the bond markets, you know, that we're making these lower highs, and you can see we're making higher lows. We have to see a complete reversal here to really stoke any fear in dollar longs or in stock market longs either. What else? You know, I know we looked at the euro yen, pound yen. Let's go over to the Aussie yen really quick. Yeah, this thing's pretty heavy. See this little trend line support here in the Aussie yen? We got to watch that. New Zealand yen also, and these are risk off indicators too, which traditional, not necessarily saying that correlation still stands at the moment, but typical. The New Zealand yen, take a real quick look at this. Okay, so you're following my trend line here, right? Okay. Notice how we over the last couple of days, we kept challenging the underside of that trend line. The RBNZ met yesterday. Then you have the can't think of his name right now, the stand-in central bank head, Spencer. He took over for Wheeler until I think spring of next year. He's just temporary. He's a placeholder, if you will. And you know, it was interesting because yesterday he was saying that the new government's going to add a 0.5% GDP to growth. And I'm sitting there thinking, okay, I'm an Eskimo, and I'm wanting to buy your ice cream sandwich right now. So I don't know who was trying to sell that to, but anyway, the New Zealand really faced some pretty big resistance here. New Zealand yen, that's pretty key. And you got the Aussie yen, which is approaching really key support. Now, if they turn, then that's going to be maybe an early indication that we're seeing a little bit of risk off. That's something worth noting, I think. But yeah, okay. So I think we should keep an eye on those. I'm actually thinking something right now. I'm thinking how important the Aussie yen is if it starts breaking through these lows.
I have that trend line marked as quite important. Actually, it's a triangle. I think then it's going to move down to 85.70 next stop if we actually break below there.
Yeah, I think that this you know, a move down to here is not, you know, out of the question.
I could hear all the cylinders firing up in your brain, thinking if you want to short it, right?
Yeah, they are. Well, it's not I want to do it right now. It's just, it's one that I have to mark up on my list of things to do if the market actually does reverse. But there's so many things, Steve, that has to happen today. You know, we have to see some follow through in North American, you know, trade to the downside, which we haven't seen downside follow through in the stock market. I don't know when the last time we saw downside follow through in the stock market, actually. I'm really not too sure. I mean, it's hard to say, you know, like, I mean, you know, the last time we've like seen some downside follow through, I guess it'd be back at the end of last year before the election. I mean, there's been maybe a little bit here and there, but not much. So I don't, you know, that's why we got to see that. We have to see some downside follow through. I want to see the bond market go bid. You know, I want to see Nikkei take out the overnight lows, because if you look at the Nikkei, we have not. Let's go to the Nikkei. Where is it? There it is. Here's the Nikkei, and so I think anybody who's long the Nikkei is probably looking at that support right there, which is also, you know, closing in on trendline support. But I think it's really key. But you can see even the overnight, yeah. So you know, as long as the Nikkei is holding up, and you know the S&P is holding up, and bonds are you know. Bonds are continue to sell off, I don't think there's a whole lot of risk here. But you know, if those things start happening, then I have to turn my attention to the Aussie yen. I have to turn my attention to the New Zealand yen. You know, I've already got a lot of yen, probably more than I should right now, but I might sprinkle it around. You know, I might you know, diversify my yen across a couple other pairs, rather than just being, you know, mostly euro yen and dollar yen at this moment. But those are things that I think has to happen, and I think that a lot has to take place. Oh, also, let's take a real quick look at gold. I don't know if you took a look at gold, Steve, but gold is yeah,
but,
I mean,
but not with a view on the very, very short term. We had a, you know, a more general view. I mean, I didn't go down to a 1 hour or 4 hour chart. We just talked about the daily, and that both gold and silver are likely within triangles at the moment.
Yeah, you know,
I'm bullish, Blake. I'm bullish. And you know what? Look at how the dollar's rallying, and it's not even affecting the gold market much.
Yeah, I mean, gold did. I mean, we just saw that little slump in gold, and then a right bounce back. And if you look at it from an hourly chart, this is like a nice little rounded bottom that we're developing. So I mean, it looks like it can break higher. It does. I don't. But that's one of those things that has to happen. You know, you have to see a break higher.
I'm gonna make Dale very unhappy. If you zoom out at exactly the chart you have in front of you, Dale would tell you that what you're seeing there is a 3-drive pattern. Right, Dale? Look at the 3 last highs in gold on the hourly chart. RSI is diverging more in each one of them.
Oh, 1, 2, 3, yeah.
Yep.
Yeah. Yeah. And, you know, and again, that makes sense, especially if stocks are going to find some support today. That is going to make some sense. A couple. I know you have an interview right now.
A great one.
A great one. So I'm going to have to turn it back over to you, Dale. But guys and gals, I'm sorry I didn't get to address all the other questions. I just, you know, there's a lot of stuff that I wanted to cover today. I hope you all have a great trading session, and I hope you have a great interview, Dale.
Thank you, Blake. Nice call on the end this week and preparing our community for at least, you know, a day or so of risk off. So
Dale,
great one.
A half a day.
Huh?
A half a day.
Just half a
Okay, feels like a week to me. Go ahead, Steve.
Just half a minute,
Yeah,
not even, because we have a question about the Nikkei from Arif. This is what I seen in the Nikkei, sorry, in the Nasdaq. Sorry, I'm sorry about the Nasdaq. So we already have a possibility of a reversal here. I was monitoring since a couple of days ago this as a potential ascending wedge, as an overthrow of that ascending wedge, and we also hit some interesting levels, both in an Elliott wave perspective. I mean, one of them, this orange level, was an equality target of wave 1 to wave 5. So, you know, we were very close to that. I mean, we just overshot it. And this is also, yesterday we touched the 227% extension of this corrective move lower, this ABC. So if today confirms that this is indeed an ascending wedge, overthrowing that ascending wedge, I think that the Nasdaq has also a very nicely set up, pattern that shows lower. But as Blake said, and as I said earlier, key is seeing how the day is going to play out. Okay, thank you.
All right, Steve.
Enjoy the interview.
Thank you. Sean Emery, thank you so much for taking time out of a fairly busy day, the busiest day of the week so far. And I'm now making you the presenter. People on investing.com are probably familiar with your writings, and I'm looking forward to hearing your voice and seeing your screen.
I just unmuted.
All right, what's going on, guys?
Hi, Sean. Great to meet you.
No, same here. Glad to be on you guys.
All right. You know you have a screen share option if you want to show your websites, plural, or any instruments that we're going to be talking about. Otherwise,
cool, yeah, I'm doing it.
Yeah.
Just pulling some stuff out right now, just so we can
okay.
Can get to that.
A little gravity today. Sir Isaac Newton, the apple finally hit him on the head,
right?
For a half a day, like Blake says. At least, at least for an hour or so or lower.
Exactly.
So, what do you see the screen share option, buddy?
Yeah, there you go. See
okay.
It.
Yeah, got you now, Avery and Company. So, I usually start off, Sean, by asking people about how they got into the industry and the business. But I wrote a little bit about you on your site, Avery Company. And, a lot of people, it's serendipitous. Like for me, when I got out of school, I was a journalism major. I had no idea what I was going to do, even though I was in the middle of the cornfields in DeKalb, Illinois. I didn't dream of, being a commodity trader. So, it didn't happen to me until as I was wandering around, wondering what I was going to do since I was out of college, someone invited me to the MERD. And then, when I saw the belly pit go past market, I was hooked from the gallery. I said, oh, this is for me. So you already knew you were taking finance in college. So I'm curious how early you were already gravitating towards the investment arena.
Yeah, I mean, pretty early. it's obviously a space where you think about it, you're talking about making money, analyzing things and trying to make money. I mean, that should interest anybody that's 15, 16, 17 years old. And essentially
because you needed money to get the girl, didn't you? Well, maybe not in high school, but later on anyway. So were you trading while you were in college or investing? Did your father or someone in your family do it to help you catch the bug?
A lot of my family's in real estate, both investing, investment banking, and all that.
Okay.
So I had a natural inclination that finance was the side I wanted to go
okay.
towards.
It was in your DNA, buddy.
Yeah, and then my dad always had CNBC on and all that good stuff with the ticker feed. So I was growing up, I was naturally around it, and I couldn't understand the ticker feed for the life of me at 15 years old. And then yeah, I fell in love with it. I love analyzing, right? So that's really the drive. And coming out the other side and being right. So I think that's what's really the driver.
Okay. All right. So also in my due diligence and reading about you, you really come from the bottoms up type approach. Fundamentals are very important to you. It's almost like fundamentals are most of it, and you blend technicals for the timing. So why don't you tell us what you look for, and then maybe give us a few examples of growth opportunities in technology. I'm also curious with the big parabolic move run we've had, what you're doing and what you tell people with where the market is now.
Yeah, so it's really it is a blended approach with fundamentals / the bottoms up type of approach. I mean, we're looking for companies. That's the best way to explain it. We're looking at companies to invest in, and when we're doing so, we're really looking at it from multiple angles and kind of how to get to a starting point. Because a lot of people go in and they want to invest or find something, but they don't really know exactly where to start. So we've actually, I don't know if you can see the screen, the idea sourcing verticals.
Got it.
This is where we start. So we break it down into really 5 different categories, and one is theme based. So think of electronic arts, and that's not a recommendation, but electronic arts is in a space where there's been a massive shift over the last several years from physical to digital. You used to get the CD-ROMs in the mail. Now you get a software update that's quick and seamless. And then they have the live gaming where you're purchasing in-app or in-game. And all this is just driven by the innovations around technology, the internet, and the speed of those transfers. So it's an area that we spotted, and we said, okay, in this area of digital transformation, which is a buzzword today, but it really started 4, 5, 6 years ago. It was, where can we go? And Electronic Arts was a perfect example, and they've done very little, right? They changed their CEO to Andrew Wilson, and they focused on that digital shift. And what has that done for them? It's transformed their business from a 40% gross margin business to a 70% gross margin business to a almost $2 billion cash flow business when they weren't making anything, and the entire business was extremely volatile 3, 4, 5, 6 years ago, to much more of this subscription-like consistent cash flow business. So theme-based is anything and everything, right? You got to get creative and try to get there before everyone else does. And then we move into financial base. So your average person.
Let me just stop you for a second. So the shift that they made, Electronic Arts, I believe you're talking about.
Yeah.
Is the management? I mean, they're the ones making the decisions and steering the ship, right? So, is part of your theme analysis management, the CEO, and having confidence in who's guiding the whole company?
Well, yeah. I mean, you need a good CEO, whether it's a transformation or just keep it going. I know Warren Buffett likes to say that eventually an idiot's going to run the show. So you want an economic moat around your business, which is true, and that's important as well. The business itself being able to defend itself without a management team completely destroying it. But when you're talking about, these transformations to the upside, you need someone that can execute and inspire. Because he has thousands of workers under him.
They have to have a vision that translates to the whole company, permeates the company, and it's their vision, right?
For sure, exactly. And you can see the shift here on the screen. You can see back in 2009, 40% margins up to 75% gross margins today, and that a lot of that has to do with simply bringing out there or shifting from that physical to digital model.
Okay.
And that's a lot of money. So it's money to investors, and if you catch it early enough and you pay the right price, obviously, you can be rewarded handsomely. Then financial base is, here's one thing that I think much more contrarian to everybody else. It's a lot of people will go into a screener, whether it's on whatever screening tool you use, and you go in there and you're like, okay, I want a company growing at 40% revenue year over year and 85% gross margins with 40% profit margins and all the good stuff, trading at 10 times earnings. Perfect company. Anyone would want that. But the truth is you're not going to, if everyone's screening for that. So you got to kind of take an opposite approach and look for some of those, but also where are you going to find something where no one's looking? And just one of the screeners that we like is just negative net income, positive operating cash flow with limited stock-based compensation. And what does that do? I mean, it takes out all the people screening for just positive net income, but the company might be generating a lot of cash flow at the end of the day. And that gets us to a good starting point of companies where we can potentially act on, where again, they're generating profits in a way, but not accounting profits, but they are generating cash profits. So financial base is an interesting way. We then go to weak sector transitions. I mean, it's always happening, and this is why this plays a vital role, because technology is performing extremely well, software and some of the other aspects of semiconductors and everything. But there's areas like retail, there's areas like
I was just going to say that, Sean, that, I'm looking at that weak sector where the strong survive. So it's one of the weakest sectors, retail. And are you currently screening things to see which ones survive the Baton Death March and might even have a good Christmas?
Yeah, so I'd like to say we did a pretty good job here. And I don't think the story's over. And we're sourcing other ideas, but one of the ideas a couple of years ago was actually, recently, within the last year, was we kind of have a little checklist. It's okay, who's going to survive in these weak areas? It's for those with a good brand, whether it's the technology they're using, like that's not retail, but Halliburton in the energy space. But then in the retail space, it's who has a good brand, a brand that's could last essentially a lifetime. And then who doesn't have debt or a lot of debt and plenty of cash. And the most important thing there is you can survive in times of negativity. I mean, just think of people in 2007, 2008. The people that went through the worst part of that and didn't come out on the other side were the ones that were over-levered and no cash, and everyone that had cash obviously made out, and that's why you have this separation in the economy. But besides that, we started looking at a company called Michael Kors, and Michael Kors has been one where if you did some of the right due diligence, you saw that on the social media side and online e-commerce, they're actually doing some really good things. Everything from their push on Instagram to they've dressed the last 3 first ladies. So that speaks legacy right there. And we did a lot of due diligence to figure out whether this brand was something meaningful to millennials. And a lot of people were looking at revenue growth declining, but if you actually paid close attention, they were actually selling more units. So people were buying more Michael Kors products, but the revenue was declining because the shift. I mean, not to get too into Michael Kors products, but they were selling previously a lot of handbags, the large size ones, to shifting to the more small kind of pouches that were lower cost but selling.
What do you carry around with you, Sean?
A fanny pack with Avery on it, and but it's a Michael Kors there. It's a Michael Kors patch.
All right, okay, buddy. I have a little pouch, but that's 10 extra pounds I carry around. But I'm interested while you're going through this, your fundamental analysis. Do you complete this whole exercise before you even look at a chart?
Yeah, so I'm looking at charts all day because that's what's happening daily. These things don't happen daily. These are very long term things where you only get information every so often, plus the due diligence you're doing in between. But we're always looking at charts, and before we pull the trigger, that's how technicals comes in, and it's very simplistic. I mean, we're not trying to use any of some of the more complex readings or indicators. It's really looking for areas that we think are support. We're looking for momentum shifts, whether it's divergences in MACD or divergences in RSI, or looking at simple moving averages. Those are like the key components, but it's ensuring that on the way in we're starting on the right foot on each investment, because in the short term the markets can do whatever they want, and if we're right about our thesis, then we'll be right. But again, we want to give myself and our clients a good experience right from the get-go.
Okay, so timing comes in, and I believe that with your kind of fundamental analysis, you're looking for things that the market hasn't yet recognized the value, and you're looking at the relative strength of a weak sector. So can you say at the beginning of your ideas, you're more counter trend, and then as they play out, you become part of the trend?
Sometimes. So that's kind of like the value versus growth, and are you only on the value side? Now I'm getting into the weeds again, but value to us is anything. Is there value in this business, whether it's contrarian to the downside, where again this is a weak sector, or this is the Salesforce of the world, where you're actually contrarian to the upside, and the trend's actually in your favor from a technical perspective and a business perspective, but you still think the market's mispricing what this asset's worth. Is Salesforce going to be a new operating system, and everyone's going to build on top of it and take over the client server industry, which is like $1.5 trillion. They're only capturing 10, 20 billion today. If you think that, then there's significant value left. I know on the other side, it's like a Michael Kors is there value left, even though the trends, both technically and operation-wise, are negative. So we try to be contrarian in the sense of we're looking for value in anything that makes sense. That's why we have these idea verticals, which they're very different. Themes very different than weak sector. They're polar opposites. One's looking for where's the growth, and one's looking for where's the opportunity in beating up areas. And then financial base is literally just trying to outmaneuver some of these areas that some of your routine screeners, where that's not the first place to look, right? Because everyone's looked there. So how can you kind of outmaneuver investors?
Any sectors that feel extremely stretched and overvalued to you at this point in the market cycle?
Yeah, parts of staples. Look, McDonald's is trading at almost 30 times with no revenue growth. Okay. I don't know about you, but if you were going to buy a house and it was going to take you 30 years to get the cash flow back, I wouldn't recommend it. and it's good franchise, good business, good management, all the good stuff. But Nike is kind of another one, similar thesis. Even Under Armour. I mean, you're looking at it still trading extremely rich, and I've been talking about it for a while on that side because I mean the trend's negative operationally, and for whatever reason they continue to get a pretty nice multiple. So Staples, some of the apparel, footwear, as they shift to technology, people are, I guess, giving them more of a premium multiple, like a Nike, just because they have a Nike Run Club app. Doesn't make them a tech company.
Do you ever delve into areas outside of technology being your bailiwick? Like, for example, energy has become a more constructive. The action's been pretty constructive. They've been out of favor for a long time. The miners are pretty cheap. Do you ever delve into any commodity-related groups?
Yeah, so it's saying yes and then saying no, right? Because going into Halliburton, Schlumberger, Baker Hughes is almost like being in the tech side of energy.
Interesting. Okay.
So yeah, I mean, a 2-second thesis on
even within the old economy, you could find tech plays in the old economy now, making the transition, like Halliburton.
Yeah, I mean, they created the problem if you think about it, right? Fracking.
Yeah.
I mean, we went into that space and said, who's creating the problem? That's who we want to own, not the ones that are dependent on the problem creator. So that was our thesis there, and that's essentially what led us to those players in that industry. And again, that started with a weak sector transition based kind of idea source.
Right.
And then we came up with that overall thesis, and then but this has been years in the making. So.
Okay, so why don't we spend the last few minutes perhaps showing your website, the market meter, and tell us what it does. And since we're on Avery and Company, is this a registered investment advisor or research firm? What is Avery?
Yeah, so market meter, personal blog. It's something where I like to share different ideas, topics, whatnot. Very short, so I don't like to read too much. I prefer videos. I read a lot, but when it comes to reading specific small lists on markets, I like extremely short pieces, and that's what you'll find on the market meters. I mean,
okay,
that's exactly the length you're getting. It takes you 2 minutes to read something, if that. And then when you look at Avery, it's our registered investment advisor.
Okay.
Again, we're focused on investing in individual companies and concentrated book of companies. So we're not investing in 50, 60, 100 names. We're investing in 8 to 25 or so, and trying to discover kind of these businesses in which offer value either through growth or through these transitions. And that's really the two different verticals that we do. And all of our research is independent to us, so we don't leverage of any of the big wirehouses or investment banks. So that's what we're doing.
Okay. Well, yeah, I want to thank you so much. Great meeting you. I'd like to be able to address you as my trading warrior brother, Sean, and wish you, continued success, and may your clients at Avery continue to do well, and want to encourage people, although Forex is our bailiwick, a lot of our audience, guys, you have your retirement in the market, whether you know it or not. Maybe you take a look at Sean's commentary on the market meter, and just want to wish you a great holiday season and 2018 ahead of you, Sean.
No, thank you. And yeah, and same to you. And Forex and what I do daily aren't mutually exclusive. So a lot of our companies get influenced by what's most talked about on this show. So there's definitely synergies there, and yeah, it's good stuff.
Okay, buddy. Well, good hunting, and really, I'm glad to have met you, and let's keep in touch, and we'll do it again sometime next year, okay?
For sure. For sure. Happy Thanksgiving if I don't speak to you then.
All right, Sean. Everyone, that's Sean Emery. His Twitter handle is _ at Sean Emery. And thank you, and see everyone. We'll wrap up the week. TGIF tomorrow. Good hunting the rest of the day. And remember, don't just count your pips, count your blessings. Thank you, Face. Thank you, Steve. Thank you, Blake. And thank you, Sean, for a great. And thank you, investing.com, for joining us today. Adios.